The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Looking good, Billy Ray. Feeling good, Lewis. A very important announcement. Happy holidays and a Merry Christmas or whatever holiday you have for this type of the time of the year to everybody here at TFNN. And be sure to do something nice for someone who has a whole lot less than you, because this is the spirit of Christmas, not the presents, but the giving. That's the real key. That's the one thing that I gave my kids that I've been very proud of. I've got two beautiful daughters that are very, very wonderful at giving and stuff, so it's really a joy to see that. And we do that here in the family too. Only the little kids get one present. Everybody else, we donate whatever we're going to give to people that have a whole lot less, and to see their faces is certainly worth the joy, that's for sure. Anyway, we'll see what's going to be happening here. We'll start out here with the stock of the Dow Jones here, folks. This basically shows you something that I think is getting ready to happen. I know we're up today after being down 600 points in a matter of 12 trading hours in the Dow. We're getting a snapback rally. But if you look at the comparison to what happened the last time we had these two long-ranging bars, you can see that that's what we have the same type of scenario going here right now. Should we get above 2050 in the S&P, then I would say, wow, there's something really wrong here, and I've really missed this one. But until that happens, I think we've got a chance for this market to get a move to the upside. That's the main thing that I'm looking at. There's a few other important things that we're going to be looking at today as we come into the holiday season. And believe me, this is the worst time of the year for trading stocks, folks, these last few days of the year, because of the holiday atmosphere everywhere and the shortened hours and the less volume. But sometimes that can lead to tremendous volatility, and that's something that we could certainly understand if we do see that. So we'll watch this very, very closely. Okay, now the next thing I wanted to mention on this Dow chart, which is very important, is I want you to notice that we have these lower tops that are in here, and you'll notice that the market rallies quickly and then comes down into a new low. That's a sign. It's a cycle phenomenon known as high translation. In other words, if the market rallies just a little bit and then goes down and makes a new low, in other words, it crests on the left side of the cycle, that's viewed as high translation to the left, and that is a very bearish phenomenon. And we're seeing that especially in the New York Stock Exchange Index. That's one that we are definitely looking at for a situation where we're going to be looking at much lower prices once that occurs, and that's what we have going on right now. Now, if we take a look at the New York Stock Exchange Index on a little bit longer time frame, we'll just look at it on the weekly without any craziness or anything like that. We'll just look at it, what we're watching here. And remember, this is the real stock market, folks. People don't realize this, but there are 8,700 listed stocks on the various exchanges here in the United States. That's Philadelphia Exchange, American Exchange, all the others, and 4,200 of those stocks have options, so they're pretty good volume. But all of this rally that we had, all the hoopla that we had since that August low and also before that, has basically been done with about 100 stocks in the S&P, about 15 of the Dow stocks, and about 10 or 15 of the S&P stocks. So you're talking about 130 stocks that have done this out of 8,700. That's not a good thing. Now, we've looked at the breadth over and over again to show you that the breadth is I don't have to show you what it looks like Friday because it's really bad Friday, and we're very oversold. That's why we're getting this little bit of a bounce here, in my opinion, of course. But if we take a look at this New York Stock Exchange Index on a weekly basis, you'll see that we made the perfect ABCD pattern from 2014 into 2015. We've looked at the longer term on this so many times that I just don't want to bore you with it, but that's where we have the 1, 2, 3, 4, 5 expanding triangle pattern that topped on May the 19th. And then we came down into August 24th. We rallied up to a perfect 61% retracement. And if you'll look at this very, very closely, you'll notice the little green line that's there at point C that I drew across where we touched the old lows from where we broke down. We went back and looked at that line one more time. That happened on November the 2nd when we rallied up. And now we've started down, and we've made the 61% retracement on the downside on Friday. And I believe that, we're heading down towards 8,800, which is another 12% or so in the New York Stock Exchange, and also in the Dow. That would be equivalent to about 1,800 points more in the Dow is what it looks like to me. So we'll watch that, watch these levels very, very closely, and we'll see what's really happening. The first question that we had here in the den today, before I get on to what else is going on here, is the price of Apple. And Apple had the whole 60-minute thing on last night with Tim Cook and Charlie Rose. I really enjoyed that, and it was very interesting. They do have a phenomenal company. There's no question about that. But this is the Apple stock, and there again, you're going to see that same phenomenon of high translation to the left. You'll notice that the cycles are cresting early and then coming down. You'll notice the first two cycles between August and October, they crested to the right of the cycle. And it was nothing more than a 30-day cycle. On the first two cycles, it crested to the right. And in this last cycle that we're in, we crested to the left. And that comes in on Christmas. And we're not going to be here, of course. And we also have a full moon. So you'd be looking for Apple probably be bottoming either tomorrow or maybe early Wednesday, or possibly the first day when we come back, which I believe will be the 28th, a week from today, after the Christmas holidays. And you want to watch Apple because we need to keep Apple above 104. I know that's a key figure that John Logan talked about yesterday, and it certainly looks like a perfect 61% retracement on that one at the same time that he's looking at the same number that we're looking at also. So we want to watch it very, very closely. The next one I wanted to show you, of course, is the New York. Let's go to the, just get one thing at a time in here. We will look here at the NASDAQ here, and you'll see that we have some much lower prices in the NASDAQ, forecasted also somewhere around 43.07. We'll see. Now we have lower. We did make a higher high here on December the 2nd when we had that big rally up. And then, of course, our good friend Norm Winsky from Astro Trends was calling for a big down on December the 4th. And, of course, we got that. We came into the December 14th, where we had a little bit of a bounce, and we've already taken that low out in the Dow Jones from the 14th. We haven't done it yet in the S&P. We missed it by about 9 points on Friday, and so we're very, very close. We came down so hard, it's telling you that there's no fear coming into the market yet, folks. There really isn't. Let's just take a quick look here at the VIX. And I'm sure that it's going to be hammered again today, but look at the VIX. There's no fear in this market at all. This last rally that we had just went right up to the 61% retracement of the one from December 14th. So no one's afraid, and that's not a good thing in my opinion, because these charts look exceedingly bearish. I look at them and I said, my goodness, it just looks really scary. Remember that fear, the acronym that Tony Robbins uses, is false evidence appearing real. So most fears never materialize. So we'll take a look at it. But if you want to see a bearish chart, and I'm going to show you one, just a second right here. And this affects all of us. And this is the Dow Jones Transportation. On the blue line that you see there, we're looking at the Dow Jones Industrials. And as you can see, they're still quite a bit above their August lows, but we have shattered the August lows, and that was a really big cycle point when we had that, the NASDAQ was down, I forget what it was. I think it was 150 points. It was down the limit that day. And, of course, it reversed from that point and went up and made new highs, the only index of any consequence to do that. But this tells us that this ABCD pattern that we have going on now is going to be fulfilled at around 6,900. So that's another, that's about another, it's another, wow, that's another 10%. Or more, or 20% more in the Dow Jones Transportation to the downside. We've already exceeded the correction that we had in 2011, which was the major correction before we made the big up move in the Dow transports. But the transports are part of the Dow theory, which says that they all should go together. And of course, the utilities are still coming down also because we're looking at higher interest rates, and that makes their index go down. And then also we have the Dow Jones Transportation. And this transportation, is really skewed because we have low oil prices. We got oil at under $35 a barrel. And this should be making FedEx and UPS and American Airlines and United and Delta, they should be, raking in the dough. And that is, that may not be happening because the Dow Jones Transportation stocks, continue to be hit. So those are things that you've got to pay attention to if you're looking at this from just a broad perspective. Remember, in the land of the blind, the one-eyed man is king, so keep your eye open. There's something going on out there, folks. There's something that's really, really, really important to look at. Now, the $64 question that people are asking me is what is happening to the gold market? Because we possibly made a double bottom down there. And I want to bring this up to you to show you because this is what I was watching for today, because we just went up to this level and hit this downtrend line today at 1075 again. We really need gold to get above that 1078 level for me to confirm that, yes, there's a possibility of this double bottom in here. So we'll take a break here as Santa fills up the relish tray and the hors d'oeuvres, and we'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're taking a look now at the gold market. I posted this downtrend chart that I've been looking at. You notice that these highs that we've had, these are nothing more than fib points. We really need to get gold above the 1078 level to really get it moving, in my opinion. So far, we've been to this is about 1070, almost 1076. But if we can pop through that 1078 level and stay there for just a few minutes, I think it's got a chance, to be moving here. Now, I've had a question about the bond market. I believe the bond market is, the bonds, I believe, are going to go lower. Interest rates are going to go higher. The question is whether we're going to be able to clear this 157 level that has been such strong resistance in the bonds. That's basically the 61% retracement of this whole move down. We put the bonds up in here, take a look at them here, because they're in this really tight triangle that we've been watching for quite some time, and then we'll keep an eye on that, folks. I attended a webinar done out of the country. It was done out of Asia, and boy, I'll tell you, some of the claims that people made, they were just so unreasonable that I wasn't involved. I was just an attendee. But boy, they really made some wild claims about returns and what people were doing. All they did was show ones that were, fabulous. I mean, like the Green Mountain grocer. That happened to be. They didn't show that one, but that was one that was like that, where you bought a call and then it was taken over for $40 higher, and you made 4,271%. They alluded to the fact that happens, all the time. So we'll have to wait and see. This is a very special time of the year for me because it brings back so many memories of my Drexel days. When I was at Drexel, we were of course, in Beverly Hills on Rodeo and Wilshire, and the office was we had 24 stockbrokers in the office, and then we had myself and 3 commodity brokers, and there were, out of the 24 stockbrokers in the office, I was a stockbroker, but I didn't include myself because I basically only did commodities. But there were 22 Jewish brokers, 1 Chinese broker, Adora Chan, who's still to this day working. She works for Edward Jones now. She has her own business through them. And then there was me. I was the stockbroker that was non-Jewish, but it was really a great environment because we had Hanukkah, and we had those 7 days, and then we had Christmas, and oh my God, the Christmas was so special there, and we had a big tree, and there were always the firm was very generous, which they should have been because they were raking in the dough quite a bit. And that leads to my second question that someone brought to me over the weekend: is how did Drexel and Milken make all the money? Well, Milken was trained at Wharton here in Philadelphia. He got his MBA. I think he graduated in 70 or 71. He made a proposal to several stock firms about how to take these junk bonds and dress them up, put a little lipstick on them, and call them high-yield bonds. And Drexel bought into the thing, and so they started to do that. And he got so big that he wanted to move to California, and that's what happened. He moved there, I believe, in 73 or 74. I started there in 76. So anyway, the way they made their money was this: he became the market for junk bonds. And so a person would come in, and a bank or something, say, we'd like to buy some junk bonds, and the salesman, the broker, would say, well, the market's really hot now. What would you like to have? And they'd say, well, we'd like to buy, Liberty Savings junk bonds. The bonds were trading, let's say, at 106, and all of a sudden the spread would go from 96 out to 124. So if you wanted to buy them, you had to pay 124, and if you wanted to sell them, you had to sell them at 96. And so they made their money off the spread. The spread on a bond is usually a point to point and a half, and they were making somewhere between 20 and 50 to 100 times that on every bond that they made. If you want to see how this was done, there's a book called The Den of Thieves by a guy named Jackson, I believe. I think it was Jackson. I'm not sure exactly, but I've got the book at home. It's called The Den of Thieves. You can get it on Amazon, and it's a fabulous book, and it really explains, everything. That shows the Milken building that was there, the 4-story building that's still there to this day. But that's what you want to look at if you want to understand how to do that. Okay, 877-927-6648.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we have our first caller on the line. Lou from New Hampshire, are you there?
Yes, I'm here.
What can I do for you, my friend?
Thinking of going long the S&P.
You want to go long the S&P?
For a couple of days, sure.
Yeah, I suppose you could. The question is, the best place to buy it then would have been on the close, and because you gapped up, and then Sunday night you didn't go down, so that was the first sign that there probably wasn't going to be, much of a follow through today. But boy, I can't chase it here up 20 points. What you might want to do is watch for a small ABCD pattern intraday maybe to try to do that. But frankly, and I'm probably going way out on a limb here now, this trend is down and down sharply. I think it'd be easier to find, try to find stocks to sell, or, find something to sell, as opposed to try to pick a bottom in here. These long bars down that we had on Thursday and Friday, I believe are very, very important. And I think it'd be much easier trade to try to find a place to sell. Like today in the S&P, around that 1220 level should be some pretty good resistance, I would think. But you'll have to pick a spot. That's the main thing. And with the market as volatile as it is, Lou, you'll have to probably increase your stop from, if you use it like a 5-point stop, you'd have to increase it probably to 10 points, given the big volatility that they have today.
Right. I see that. Yes. Okay, great. Larry.
Try to find an easy one, my friend. That would be the thing that I would be looking to do. That's a little too hard to try to pick a bottom in here. It's been in a free fall for 3 days, and we are oversold, so we're getting a little bit of a bounce back, but I frankly don't think that'll last very long. I could be wrong, and if I am, you'll get a pullback to buy it, but I wouldn't touch it today for several reasons. The fact that it's Christmas week and it's thinner than gasoline, so you just got to be really careful here.
Yes. And what do you think of gold at this point?
The gold has got to get above the 1078 level. If we can get gold above 1078, I think it's got a real chance, and then we'll attack the 1085. Above 1085, then the double bottom is in, and we'll be heading to a minimum of 1130 to 1150 in the gold. But so far, it's stopped right where it should have today, and still early in the day, of course. But we still have to do that if we're going to go higher.
Okay, thank you, Larry.
Thank you, Lou, and happy holidays to you, my friend.
You too. You too.
You bet. Thank you for calling in. Okay, now we want to switch over to, I want to move over to the Canadian dollar here, because I think we're over something really, really important here in the Canadian dollar, and which also is important to the oil market. As you know, the whole world knows that we have a lot of oil. We've got gasoline under $2 a gallon, many places across the nation today. And whether it's going to continue or not. Now, gasoline is still holding up relatively well, but that's the only one of the complex. The one that you're looking at here, this is a chart from our good friend Jim Bartolioni, and Jim is showing the oil services index over the Canadian dollar, and then also which is also known as the loonie, and it shows that there's a strong relationship between this oil complex and the Canadian dollar, and that's the same thing that we see when we're looking at the Canadian dollar with the oil market. It's the same thing that we're looking at. Now, we're going to take a look here and go back. This was before the Desert Storm War, but it goes back almost 20 years to look at this stock, showing you the relative strength of the oil services index and how it is related to the, you'll notice we're having this really strong divergence on the bottom here, where it says we're in a new all-time low. We've got measured moves that are in here. We had one from 1997 into the low into 1999, and we've got another one right now, but this time we're having a divergence. In other words, the strength on the downside is weakening. The descent of the market is actually weakening a little bit. So keep in mind that that's the thing that we're watching. There also is a head and shoulder pattern in this long-term monthly chart, and you'll see that that pattern has just completed, is completing the ABCD structure in that. So we want to watch this very, very closely because of the similarities that we have on the correlation between the Canadian dollar and the crude oil market. In fact, the Canadian dollar today is actually, gaining with crude oil, making new contract lows today. So we want to watch this one really closely. I think this could be the big surprise early in the year. No one thinks it could happen. And, I don't know diddly squat about the fundamentals. I just know there's a lot of oil out there because prices have been going down. You do not have to be a rocket scientist to figure that out. But we'll watch this with a little bit of anticipation, because I'm looking for a spot to go long the crude oil in here, and also to go long the Canadian dollar also. Now, the Canadian dollar, to me, has already completed the pattern. If we look at the long-term Canadian dollar here, which goes back more than 20 years. You'll notice that there's a huge head and shoulders pattern here going over the past 10 years. Well, this is over the past 30 years, but you'll notice from the left shoulder to the head and the head to the right shoulder, that time distance is equal. And so you've got a lot of things that are saying that this could be it. We've had these 3 measured moves that have occurred over the last 30-some years, and now we have this head and shoulders pattern. And we go to the long-term, the shorter-term dailies, we're seeing really strong support into that level last, and we'll see what we're doing. We've got a really good chance here for gold to pop through these levels here very quickly. We're trading at if we get above 1080 in gold, I think 1078, 1079, we got a really good chance for this market to pop through. And that'll take out the highs of yesterday, and that'll make a pretty good move here. Now, we'll take a look here at silver, because we're looking at the same thing in silver. And you'll notice when silver came down, it also came down and touched a double bottom in this area of a 1370. And then we've had a pretty good rally in it today, and it's very close to popping through that level. And that would take us up to around 1435 per ounce in silver. Silver needs to clear above 1450 per ounce. If silver can get above that, then it's got a chance, for a pretty good move to the upside, and we'll know that that double bottom's in. And if the double bottom is in, folks, it's going to give you chances to buy it, because there's not many people out there that are bullish gold and silver, just like there's nobody bullish the crude oil market. Now, this is something else I wanted to share with you. Each day when I look at things, I always go to the Chicago Mercantile to check the open interest in what's going on with the markets. And I wanted to share with you the open interest for, we'll see if the open interest is going to hold at these levels that we've looking at here. Now, this is what's important. You'll notice the little blue boxes that I've marked here. This is really important, folks. You'll notice the interest rates. These are just futures only. And interest rates are your Treasury bonds and Treasury notes. Those are the largest traded in the world. You'll notice that the volume on the interest rates is twice what it is on the energy. But if you'll notice over to the right, we've now exceeded the open interest in the energy than we have in the Treasury bonds. Now, an open interest means that for every buyer, a person comes in to buy a contract, there has to be a seller on the other side. That's a commodity contract. Now, I ask you a question here. As oil is going down, do you think that the small speculator is in there buying it, and with everything being as bearish as it is? No, it would be the exact opposite. As when oil was going to $140 or $100 a barrel, there were people, open interest was increasing, and somebody was selling. That's big money out there, folks. They've got deep pockets. That's the only way they can do that. That's the way it looks to me. I could be totally wrong, but the chart is telling us that we're getting close to something really dramatic in this oil. When you see open interest switch over like this would really be a big. Now, frankly, what I'd like to see was I'd like to see a big drop in open interest as prices were coming down, because that means all the players are leaving the market, including the shorts, and then you really have a vacuum to the upside. But we've got to watch it real closely here, because it's really, really important to see, whether this is going to hold it up. This is a big thing that's going on with the main thing, so we want to watch it very, very closely. As near as I can tell, we got a real chance at this level right here. We've got crude oil making new lows now. We should have some pretty good support down here at the 35.20 level. I'm in February crude now, folks. I've moved my operation over to February crude, and that's what I'm looking at here. Is we should have some pretty good support around the 130. Around 35.20. We're 35.38 right now, so we're a heartbeat away. In fact, it's really quiet considering we're in new low ground. You'd think it'd be dropping 20, 30, 40 cents at a time, which I better shut up because it might do that in just a few minutes. But we'll see. We'll see what happens to it anyway. Okay, we did get up to the 2015 level in the S&P. That was the intermediate high that we made Friday before we started into new low ground and the low on the way down. So we want to watch that level, really pretty quite closely, and we'll see if that holds it. But the stock market looks bearish, folks. There is no way that I think anybody that could look at these charts on any of these indices that we're looking at, whether it's the Dow Jones, the transportation, especially the New York Stock Exchange Index, that you can make a bullish picture for this. And if you look at, what's happening with earnings and things like that, that earnings are going down, and all the retail sales are coming from, Amazon and the online retailers. That's where the business is coming. I mean, the people that are delivering these packages, I always ask them how they're doing, and they said they've never been this busy. Well, if that's the case, why aren't the stocks of UPS and Federal Express, pulling the Dow Jones transportations up? This is not a time to be long stocks. This is incredibly bearish scenario. Now, you probably think that I've had too much eggnog, looking at a potential low in the oil market. But when I looked at all of these charts, and the other one that we've talked about, the seasonal that is there, there's a strong seasonal probability for oil to bottom during the month of December. So when you add the whole thing up, I think you've got to think as a little contrarian here and try to get into that vein and see if you can find a spot here where you want to be long some oil, possibly, because that could really be a big surprise. We're not going to stop using oil right away. I mean, we stopped using whale oil back in the late 1800s. That's where John D. Rockefeller made all of his money. He converted the world from whale oil to petroleum, which he got the Person of the Year from the United Whales of America Club that year. So, because they stopped killing whales for a while anyway. But anyway, they got back into that a little bit later. But I don't want to go into the esoteric part of ergonomics or whatever they want to call it, but we'll have to wait and see what's going on. I haven't got this excited about a market since soybeans back on Memorial Day, when we were looking at beans making those used patterns. Were right before we got the $1.50 rally in beans. I haven't been this excited on. Well, I was excited at gold at 10.50 also, but this I haven't been excited about this in a long time in the crude. I could be 100% wrong, which is that happens all the time too, but it's got a shot here. So you just want to keep watching it closely here in this oil, because you're going to see a pop. I think it could be a skirmish in the Middle East, or it could be something related to whatever. But we'll maybe Trump will make Putin his vice presidential candidate. I don't know. Maybe that would make oil rally. I don't know. But you'll see a pop in oil, and I think that'll be the first indication that, yes, we could get this big rally. I mean, nobody's looking for it. I mean, I heard $15 oil today from some guy in Asia. Well, that was over the weekend. But when you start hearing crazy things like that, you sort of keep that one eye open and say, yeah, maybe. Just like when it was 150, 144, you couldn't anybody. Goldman Sachs came out with a special report, $200 crude oil. And of course, what was Goldman Sachs doing? Selling all the way up. So remember that who's putting out these reports is pretty interesting. All I'm doing is I'm just looking at the patterns. That's all I'm basically looking at. And if I feel that we're close with something and we got to start watching it, that's what I'm doing. I'm just giving you a heads up. 877-927-6648 from the offices of Duke & Duke in Philadelphia.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and here we are finishing up our early Monday show. We're up quite a bit. We're up about 15 points in the S&P, over 100 in the Dow. Folks, just be really careful in here. I showed some charts to start the show that showed you the overall bearish scenario that we have going across almost all the markets. I didn't even get a chance to look at the global markets, but they even look worse than ours because, you know, the Hang Seng was only able to rally to a 38% retracement, as was the global markets, the what they call the emerging markets also did the same thing. Same thing is true in China. So we do have a tremendous period here where we're looking at much, much lower prices in some of these things. So keep your powder dry. There should be some minor support between 2005 and 2000 even in the S&P, but if we get below 2000 sometime today, that's going to be another negative thing in my opinion, because this is nothing more than a short covering rally. We had one of these 20 plus short covering rallies last Thursday, if you'll remember, and then the market turned around and went lower. So don't be surprised if it doesn't do it again. It doesn't do anything more than repeat itself, over and over again. Now, on tomorrow's show, I'm going to talk a little bit about sacred geometry in a book by Robert Lawyer on sacred geometry, and then also a book by Stephen Skinner to give you some background if you're interested in looking at some of the numbers of the sacred geometry series, of which the Fibonacci summation series is part of, but it's only a part of a larger study of mathematics known as sacred geometry. And that's what we're doing here with pattern recognition, is to match these numbers up to patterns that we're looking for, and that's pretty much what we're watching, and that's what we try to do. Whether that's going to make any difference or not, we don't know, but the odds do favor us, and that's what we're looking at. So be really careful, folks. You don't want the market to close badly, and that's basically, live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.